In this video, we are looking at trend line and reference line trading strategy. Now, what I'm about to share in this video is not your regular way of trading trend line. Normally, on a regular trend line, you will need a 2-point for you to connect your trend line. And what I'm saying in essence is you need a point A and a point B for you to be able to connect your trend line, which is this point and this point. But when we talk about a reference line, it's a different thing entirely. For example, this is a trend line. This trend line is connected based on structural point. Consider this trend line is connecting our higher low in a downtrend, which is okay for us to make an entry based on those strategy. But when we are talking about our reference line is what helps us to make our entry and to make our exit. So reference line help us to make our entry and to make our exit. Now, what are we trying to say in essence? In an essence, this is what I'm trying to explain. Looking at this scenario, price is coming down. Okay, so at a point, we have not gotten any of this structural point. So once price start a movement, the first thing you need to do, if you have been following our video before now, we say when price is at the upper Bollinger Band, is an exhaustion and there's a possibility for price to begin to reverse from that zone. So immediately price is at that zone, what will I do? I will pick up my reference line, which is the same tool I use for my trend line. This is my reference line. I will leave a little gap between that particular candle and then I will place the line like this. And of course, just as you can see that price has been falling in between the line for a while. So, and then you can see at this zone, price break out of it. So if hadn't been I have any entry from this zone, immediately price break out of this reference line, I will exit my trade. And in that scenario, price break out of it and price gave us this bullish candle. So immediately I had that bullish candle and I see price break out of it, I will get another reference line and I will connect the reference line this way because price is moving to the upside. So I'll connect the reference line with a little gap from this candle. And lo and behold, you can see what price is doing. Price plays around it. Price break through the reference line. And look at what happened. Price came down. This pullback is a retest of the reference line. And of course, this price is already below the middle Bollinger Band, which has established for me. Now, this price falling below the middle Bollinger Band has established for me that I'm in a downtrend. So the price break through it, retest it, and immediately price is doing all this play around. I will adjust my reference line and I'll connect my reference line this way. And price breakout of the trend line gave me this movement, so I will make my entry here and my stop loss will be above this high. Now that I have point A and I have my point B, I can now connect my trend line, right? So now that brings me to the normal point of the trend line that I know. So I will now bring my trend line now and connect my trend line. So you can see now that there is a difference between how I make my entry based on the reference line. But my trend line will help me to determine the overall market direction. And now price has changed direction, price is moving to the downside. So immediately this price begin to move, I will now place my reference line, give it a little gap from the main candle, and you can see how price was moving. And when price break through it, I will exit the trade here. Okay, price break through it here, I will exit my trade because I know there is a break there. And now price is moving this way, so I will connect the reference line again this way because at the time this is only what I was seeing. So when I was seeing this, I will connect my trend line. price break out of it, came, we tap this, and then price break out of my reference line, right? So when price break out of this reference line, the price still went, retest the reference line, give me this bearish engulfing candlestick. And I can also treat this as a trade pattern, as a bearish flag pattern, and here is a bearish flag pattern for me. So I put my reference line, look at it, price breakout, retest it, and then give a rejection. So these ones I have true confluence, a reference line breakout, and also a structural point based on my trend line. So I have my entry, price is moving down. Next, I will still pick a reference line and connect it this way. Alright, you can see now, I'll give a little gap on the candle, connect my reference line, and look at this one, price return, break my reference line, so I will exit, and at the retest of this, I'm already out of it. So what next will I do? I will pick up my reference line. Knowing that price is now moving to the upside, I'll give a little gap in between this, and I'll connect my reference line. So if this price is going to continue going bullish, this is what will happen. In connection to my reference line that I've connected, if price want to go bullish, it will come here. It won't break my reference line, rather it will retest my reference line and continue to the upside and becomes bullish. Alright, but if it will not, it will happen the way it is happening now. And what am I trying to say in essence? If price is not going to go bullish, price will only come, break my reference line. And look at it, price break the reference line. So I will make my entry and I'll be on my way to the downside. So this is how I will be using my reference line to time my entry and my exit, while I use my trend line to determine the overall direction of where price is going per time. So these things works pretty much simple. Let's look at other assets. Let's look at AUDJPY. Okay, so now look at what is happening here. You can easily pick up your reference line and connect these 2 points. Now this is more or less like our trend line, right? But what is happening now, here will be our reference point. For this particular movement, this is our reference point. So what we want to see is if this is going to actually continue to the downside, price will break this and continue. Otherwise, price will break out of this and then begin to give us a relative to our reference line. Okay, and this is what happens here. You can see that at this point, this is what we are saying. The exact thing is what happens here. So immediately price gave us this pattern, this bullish candle. We introduce our reference point, and you see price going up. So had it been price want to continue to the upside, this our reference point would have become our future trend line. Price would have retested and continue moving, maybe to fill this imbalance at this zone, depending on what the case may be. But this is how easy, this is how simple you can trade this as far as using the reference line is concerned. Okay, let's look at another more asset. Okay, this is GBP USD, and price has been bullish. So what this means is, now you can see that in a situation of a strong trend, what we are seeing here, this is a strong bullish trend. Okay, so if you are to use a normal trend line, there is no way you will get entry in a market such as this. Why? Because the market is strong. This is a strong uptrend. So you can't get that particular structural point you are looking for too massively. But you can use the reference line to find an entry. And look at one of it here. Price is now pulling back. I connect my reference line this way. And as you can see, price break out of the reference line, give me a golfing candle, I'll make my entry. I don't need to be afraid of anything. Remember our idea of a controlling candle. In as much as price did not close below this particular candle, which are controlling candle, will remain in this price and will keep on moving to the upside. And if the market wants to change direction, it will break, retest, and then begin to move to the downside. So that is just the idea, the concept of. But if you continue to wait, there is no way you will get an entry, because there is no clear price movement or direction to prove to you that there is a pullback, no visible pullback to connect your trend line. So you use your reference line to take advantage of it. And then when you move, another way to do this is to move to a lower time frame, maybe the 15 minutes as the case may be, and everything becomes more visible and more clearer. It will break down what is happening on the higher time frame for you, and you can be able to find your entry. Here you can find another of your entry. Here you use your reference line to connect this point, right? And you can see price break out of it, and you are on your way to the upside. So these are other easier way that you can take advantage of this and be profitable. You can see here is another one. Price was pulling back. You connect your reference line and you wait for a breakout. Why? Because of the nature of the movement of the price, it might not give you that zone you were looking for. So your reference line becomes your advantage of making your entry and making exit. And I believe you have learned something new. Please do not forget to like, share, subscribe, turn on your notification bell so you'll be the first to get notified whenever I publish our next video.